Just very late, but you were still happy.
Oh, and we're off to the races. There was a false start, but now we're off to the races now, and we're running down the straight. So you're watching the Get Busy Livin Podcast. I'm Dr. Scott from the Healthy Habits Club, and we have a special guest this morning, Tu Dinh. So, Tu, thank you so much for coming on to the podcast this morning. We appreciate your time. Uh, Looks like there's a minimal malfunction with a chair. So, uh, once again, yeah. So that I don't think that's ever happened on the podcast. That's a good one. Well done. That's a first.
Everything's happening today, Scott.
Yeah. So yeah, we apologise. We're a bit late. We had a few issues with StreamYard, so but we're up and running now. So, as I said, thank you so much for your time today too. Much appreciated, and thanks again.
Yeah. Thank you, Scott, for having me on your podcast. It's a great opportunity to be here. I love being invited on these podcasts or the webinars so that we can connect and just learn and share some insights and inspire each other. So thank you very much for having me.
Appreciate it. So we're going to start off with the first question. So tell us, Tu, what gets you out of bed every morning?
Yeah, I saw your questions, and they are pretty hard, aren't they? I would say a very strong cup of coffee will do it. That's what gets me in the morning. But I have been an independent mortgage specialist for 28 years now, Scott, and I'm still passionate about what I do. I love helping my customers through the loan process, providing them with options and just making things easier for them. But what really makes me get out of bed in the morning is to simplify those daunting and complex loan applications that are unimaginable. You know, because some clients have got their situations are quite complicated, and sometimes the bank with the processes do make it quite stressful. So I try to take that anxiety and stress out of them. And the market had been quite hot lately in the last couple of years, as you could imagine. So it is really important to educate families and young adults to get ready if they want to get into the mortgage, because this is a very special milestone in their life. So that's why I'm here. And that's what gets me out of bed in the morning. Just being able to, get into work and do these things and chat to the clients.
So you're saying that you like to help people make it easier on their life, basically, because you are right. There's a lot of fear around money. Everyone has a fear around money in some way or another, and it's very stressful. I get it. I understand. I've been through the process many times. Especially when you're buying something well, you feel as though it's expensive at the time, but then as we've seen since the dawn of time when they started loans, is that the price of real estate only goes up. It may plateau at some stage, but I've never seen it in Australia. I've never seen it drop.
Yeah. So things are getting quite expensive, and the last couple of weeks especially, I've seen that every one of my client who goes in for an inspection, it's a big crowd that's there. People are competing for the property. So they're starting to take more risk as well so that they can secure the properties. And a lot of them might not even have a loan, an unconditional approval, but they are signing an unconditional contract. And I had that with one of my clients who rang me on one Saturday, and this is about 2 months ago, and they said, I want to sign an unconditional contract, otherwise I'll just lose out, because there's so many offers that are there. And I said, I don't like doing it. I never want to advise clients to go unconditional on properties without finance getting ready. But he just wanted it so much that he did sign it. But we've got it through, and I've sort of done the figures for them. The risk is still there, but at least we can minimise it for them a little bit once we know what the situation is.
Yeah. So that you would see all sorts of different scenarios, and I suppose you're seeing more and more of that. Is that why? Is that why you brought it up? Because people are becoming more desperate.
Yes, yeah. And the price difference, the real estate would advertise the property for, say, for example, if it's a property for $1 million, they would probably they would say make an offer for about 800, but it would go for 1.5. So the price, the gap is just huge, and people just don't know what it is really worth these days because the interest is just so high.
Yeah. So that
And not the interest rate, but the interest in the people trying to get into the market is, the momentum is still quite high.
Yeah, because people are finding out you don't need to go into work anymore and work, so they can stay at home and work. So I can live anywhere in Australia and do that.
Yeah, that's right. That's the convenience. That's what's the positive thing that brought out from COVID, isn't it?
It's a different way. Yes, it's a different way of looking at business. Definitely, yes. That is true. That a lot of businesses are changing their whole structure. They don't have employees anymore. Their KPIs, key point indicators, they're all online now. They don't actually have to physically check a list anymore. Now they just do it on a computer. So that's changed completely. So when it comes to overheads, I suppose it's better for the employee as well, because then they don't have to travel anywhere.
Yes.
And also for the employer as well, because they can still monitor the employee online, and because they have software now that can do that, and they don't have to physically see what they're up to.
Yes.
So that's changed the dynamics of business completely.
Yeah, definitely. Employing the right people is they are independent, they can work by themselves. You don't really need to micromanage people anymore. That's the reason why you employ someone, so that they can take care of the work that you can't do. So therefore, if you have to double check everything they do, that's just double handling the work, really.
Yeah, correct.
Isn't it? How do you feel about the market at the moment?
How do I feel? Well, they haven't. I see they haven't touched the interest rates for a few months, so they're trying to obviously stimulate more spending. That's the only reason why they keep interest rates low, is to because I mean we've never ever seen interest rates at zero.
Yeah, no.
That's just crazy. That's just crazy. That's what happened in 2020 and 21. So that was the reason why, because they wanted people to consume more. So they're obviously they're putting the brakes on so that people can spend more, because, like you said before, it's becoming more expensive to live, and they know that if they don't pull the brakes on the interest rates, then majority of the population won't be able to afford what they're doing.
Yeah.
So, as for my circumstances, are a bit different to a lot of other people, because I do things very differently. But I think I mean, at the end of the day, it doesn't matter when you buy. The best time to buy is any time. The earlier, the better.
Yeah.
The reason being because, well, it's the old adage, if you don't have skin in the game, well, then you're not going to get anything out of it. So what you put in is what you get out. So if you don't get in now, I understand that people are fearful because they're concerned about job security because of interest rates and the likes, and they're worried about whether they can meet the mortgages. But you can see, this is that comes back to knowledge. And as I said, I think differently.
Yeah.
I think very differently. You can negotiate with banks. Banks don't have that. Banks are not the be all and end all. They are a consumer as well. They have to look after their clients as well, or else they don't get any money.
We do, and
So
it's getting quite competitive at the moment for us. With different banks. Yeah, so definitely, you're right. There's no better time to buy a property than today.
yeah, definitely, because it's as I
that's
said.
my theory, is that if you hesitate, you'll just lose out.
Well, the prices are only going up. They always do. They're always continually going up. They've gone to a crazy number now. Like I've talked to a lot of real estate agents, and they're saying it's in the vicinity of 26% increase in the rise of prices. So that's never ever seen. We've never ever seen that before. So we've seen a lot of firsts over the last 3 years, 3 or 4 years. Yeah, we just got to adjust. Just got to adjust to what the
reality. To
what the banks
just slowing it down a little bit. That would be great.
Correct. So but as I said before, prices of land and housing doesn't go down. So the quicker you get in, the better. Why? Because it's only going to go up. So as an investment, it's only going to get better. Yes, it's tough for the first 12 months. Yes, it's tough for the first 5 years. But once you pass that point, and if you do the strategies you can get around that and paying it off faster, you just got to get in front of the right people that know how to do that.
That's right. So the ultimate goal is for people to purchase their own home, pay it off. But
you're
just working. If you're just working, chipping it away and away and away and away without investing, it just takes longer. You can make additional payments. You can put money in to pay the loan off faster. So the ultimate goal is to pay your own homeowner buyer property off first. But with investments, I've seen over the years, if people take that additional step and buy an investment property, once that appreciate, and when it does appreciate, it doubles. You can actually get that capital gains to pay off your house. And I guess in the last 10 years, especially with COVID, when COVID hit, everyone thought that it was just going to slow down and that we're going to have a crash, the market's going to crash. It didn't do any of that. It did the opposite. So investments from properties over the last 4 years.
Yeah, definitely. Definitely. Yeah, definitely. Because prices went crazy. Prices have gone through the roof. So if you invested prior to 2020, then you're sitting pretty.
Yeah. It did go down a little bit, but then it went up quite fast.
It did initially. Well, it was like a freeze as such. The market did crash. The market,
in 2020, I think 2020.
It did crash. They just didn't advertise it.
Not much.
It did crash. It crashed big time, but it just wasn't advertised. Because how do I know? Because I buy gold and silver. So yeah, they fluctuated crazily over that 3-year period. Well, that first 12
Right.
months especially.
Yeah. Yeah.
So
And which
yeah,
year?
that's 2020. 2020.
Mm,
I
yeah.
still watch it. I still watch what it does.
Yeah. That's
So,
good.
but yeah, at the end of the day, it doesn't matter because you still need to invest every day anyway. So
Mhm.
yeah, if property is one of those property is well, it's the most stable. I think is a better word. It's the most
Yeah.
stable. It's doesn't go away.
Yeah.
It's
I feel safe with properties.
there'll always be land because we've got a huge desert in the middle of Australia. So so there's plenty of land to go around.
The
We just
electricity will go up the roof, that's for sure. If you're going to go
yeah,
out,
yeah.
go out there and live. Yeah.
Yeah, there's plenty of land. It's just it's whether you want to live in that sort of environment.
Yeah.
Yeah,
Mm.
we are lucky in Australia when it comes to population and area because you look at this, other countries and it's wow. Like India's got 1 billion people and it's so small in comparison,
Yeah.
and we
Yeah.
don't even come close. We don't even come close. We're a drop in the ocean
No.
when it comes to population. So
Yeah.
so land is scarce in India. Land is scarce in China as well. Same with the United
Mm.
States. They have a much larger population, and their area isn't. Is, it is larger as such, but not a great deal.
Yeah. We still have a lot of land. It's just that we need to improve the infrastructure, the
Yeah,
transportations, just so that people can go a little bit further out. Because at the
yeah,
moment, the problems is the undersupply of properties, and everyone wants to live near, close to the city where all the where work is, I guess. But yeah, we just need to spend some more money on infrastructure to improve the roads, improve facilities, so that people is able to go further out to live.
yeah. Well, and that's right. The government even admitted that they came out about a month ago and said we just don't have enough properties. We just don't have enough buildings. Um, and they want half. They said we're 500,000 short. So
Mm.
500,000 dwellings that they just don't have. And I think it was last week. Their answer to that was condos. So those
Yeah,
portable houses.
yeah,
So so they're getting desperate.
yeah. It's not a
They're
bad
getting
idea,
desperate.
actually, those portable houses.
Yeah, yeah, yeah. So that I was going to say so they're producing around about. They said they want to produce 100,000 a year, and they're
Mm,
producing around about 30,000 to 60,000 a year. They're not
mm.
even coming close.
Still not enough, though. Still nowhere near it, near
So
where
they,
we want to be.
so of
Mm.
course the builders are like, we're strapped as it is, and you want us to build more? Like, please, really?
Yeah, I hate to be building at the moment, that's for sure. The
Well,
construction is low.
it's a good problem to have. Like, there's
Mm.
too many buildings to have, but uh, yeah, it comes back to the government again. Um, yeah, fixing band-aiding everything basically.
Yeah. Mm.
So yeah, but that's good for you. That helps you because people need to move into these houses.
Yeah, we'll see how by the end of the year how it's going to roll out, what we're going to see, what's going to change. But certainly, the lending is not going to become any easier because, as you know, expenses are getting quite expensive.
Yeah,
Everything's getting quite expensive. Expenses are high, and all the banks have got to be quite vigilant about people's spending patterns and whether they're going to be able to afford the their mortgage or not.
That's it. So actually, I'll go back to my second question. You sort of led into it actually at the start. So tell us how you got into brokerage. How did you get into brokering mortgages?
Where I am at the moment, well,
No. How did you start? How did you get into it?
How did I get into it? Well, being in an Asian family, there is expectations that you've got to go to university. Right? That's the end, full stop. I don't care what you do. I don't care how you're going to do it. But that's the expectation. So when I was growing up, my parents was always working. They were never home. I mean, certainly mum gets home and she'll prepare all the food and everything's in the fridge for us. We feed, that's how we get fed. It's just find food in the fridge. So I suppose the guidance was never there. You need to go to university, but there's no guidance as to what are you passionate about? What do you love doing? What do you want to do when you grow up? What make you tick? So there's none of that. We were never exposed to any of that. So I grew up, I finished grade 12. I didn't go to university straight away, but I remembered I got a job at the Commonwealth Bank afterwards. The first day that I was there, I walked through the security door at the front, and then there was a space where the public space are for the customers to come in. And then there's a swinging door, which I opened it and it just locks behind you. On the right-hand side was the manager's office, and then right in front of it is the finance area. So I stood there looking at them and I said, it's clear as day that's where I want to be. And I worked there as a teller, and back then it was 1990s. So you had to do telling, you've got to do everything, it's little steps getting you up there, and you've got to fight with everyone to get a promotion. So at that time, being a finance specialist would probably take about 20 years to get there in the olden days, right? So I decided that wasn't for me, that I wasn't going to wait around for 20 years. And I did go to university. While I went to university, I still worked for the Commonwealth Bank. So by the end of 1995, I got the job because it was changing. The policy was changing. Commonwealth Bank was looking for people with skills rather than people that's been in the bank for a long time to be promoted. So at 25, I got my dream job, and I've been in it for 28 years. Yeah, long story short, but yeah, that's how it was. So I suppose that's always been my passion, is that I wanted to be in finance, and I got to be in finance, and it's a great career. I went from the Commonwealth Bank. I was there until, I think I was there for 7 years doing lending, commercial lending, doing financial planning. That was when financial planning, you didn't have doing that whole big book of to propose to customers like they do these days. It was much easier than that. So you had to go through the certificates to be able to service all the clients. By the year 2000, I was offered a job over at the ANZ, and I was over at ANZ for about a year as a full-time staff. And then the opportunity came up as a franchise to buy a franchise, and I was one of the first one that took it. So that's how I am here. Almost 20 years in the ANZ franchise, Scott.
So it's been that long. You've been in it for 20 years. The franchise, I mean.
Yeah. 28 years, I think. Yeah. 28
Wow.
years total. Yep.
Yeah, gotcha.
Long time.
So give us some tips. Give the audience some tips on how they can uh, better make themselves available to apply for a loan in today's market.
Yeah, in today's market, if you go years ago when you go to a broker, what they do is they apply for a loan here, just to give you a better chance. But that actually reduced your credit score. So credit score is everything. You have to keep it right up there above average. I think the bank only looks up for the bank only looks for credit scores above 700. 700 is like satisfactory. It's not 500, it's at 700. Yep. If you're always going to inquire or applying for credit cards, stores cards, everything, it'll show up on your credit report as well. And that would also reduce the credit score. Now, the best thing is save up, just put away your salary, make a commitment, save $1,000 a week or $300 a week, $500 a week, whatever, put it into an account, save the 5%, right? Clear, don't have any credit cards, don't go for the brand new card, don't get a big loan, because all that are commitments that will reduce your borrowing capacity. Have a clean credit report, good savings. With your employment, certainly, if you're in the industry, stay in the industry. If you're going to change your career, then if you're going to change from one industry to another, the bank probably make you wait until you finish your full-time or the 3 months period of probation. Otherwise, if you're continuing from one job to another, we just take that as continuous employment in the same industry, so you would be eligible as well. So those are the most important things: savings, employment, clear credit report, and if you are going to have a credit card, have a low limit and don't have multiple ones, no stores cards, no afterpay, and zip pays. They're all taken into consideration. Yeah.
Yep.
That would be the greatest scenario for the first home buyer.
Yeah. So basically, great credit score, reduce your credit card debt. Try not to apply for other credit cards and personal loans. Try and pay them out, and like you said, show a good history of saving, basically.
Yeah. I have seen some young adults who's done it really well, and they do know what their priorities are. They're really focused on buying a property. They'll go there, and if it's a car, everyone needs a car, obviously, but they're not going to go for a brand new car. They'll go for a cheap car, like we used to, Scott, when we were younger. We never got the brand new car. We always got that car that almost don't run anymore.
Yeah, or usually it was a hand-me-down.
Yeah, exactly. Do that. And save. And as soon as you get into the house, it's better than paying rent. The property goes up, and there's your equity, there's your savings, there's your investment. And if you can do it as young as you can, I mean, I've got customers as young as maybe 22, 23. So they get out of university, or they get out at grade 12, start working and do an apprentice and save up. Or the other thing is sometimes parents give the guarantee. Now, do you know anything about the parents' guarantee, Scott?
Yes. Okay, you can use your parents' property as collateral.
Exactly. So if you are out in the workforce, you've been working for 6 months or so, and you're really wanting to get a property, ask your parents if they're prepared to give you guarantee against their property. So what we do is we take collateral security against the property to allow you to borrow 100% plus costs. And once your property appreciate, then we obviously would release your parents' property. We're not going to hold for 30 years. That's an option. And the other thing is, if you can also do an investment rather than own occupier. These days, I suppose teenagers stays at home and young adults stays at home longer than they used to. We used to get out the house if we can at 18, but these days, they stay to about 27 until they find they're in a stable relationship or they're getting married to get out to a new house. Buy an investment property because most of that will be paid by the rental property, and your income can be chipped into it to pay off that house for you.
Yeah.
So those are the things that you can do, but I have seen it done by young adults and they do really, really well.
Yeah, that's right. Yeah.
It's a matter of priority. Do you want to party? Do you want to go out and do you want to spend on drinking or going on holidays, or what are your priorities? And if it's the priority is to buy a property, well, then that is it. You just save for the first 5 years. Maybe when the equity's there, maybe you can take it and take a bit out and go for your holiday. Maybe you deserve a new car. Who knows? But do the hard yards first, I'd say.
That's good advice. That's great advice. So we're sort of running out of time. I apologise for that too, because we had these technical issues at the start. So just tell us quickly about a positive outcome you've got for your clients.
A positive outcome that I've got. I had one the other day, which is quite complicated. He was self-employed, and it was also bridging, and it was also refinancing. So all of that, obviously, and on top of it, he signed an unconditional contract as well. So there was a lot of stress, a lot of anxiety going on. And because there's so many applications in the system at the moment, the service agreement date sort of extended a little bit. And as you know, as a buyer who you've already signed an unconditional contract and there's no way to get out, you get quite stressed on a daily basis. But what I do is I've done the pre-qualifications, I've done all the work, it's sitting there, and there's nothing you can do until someone else the assessor picks it up and signs it off. So you don't ignore the customer for that period of time. You still ring them up on a regular basis and give them the updates, let them know, yes, it is in the system, we've done all we can, we've done all the assessment, it looks okay. It's still not a guarantee of approval, but I think that period of time when they're most stressed is when you do need to keep up to date with the communication. So just to assure them that you're still looking after them and you're not ignoring them, and that's crucial. So finally, yesterday, we've got the full approval for them, and they're ecstatic that everything is finally over. So those are the things. It's complex and it's daunting for all of us. It's daunting for me and it's daunting for the customers. But at the end, I tried to maintain my cool, my calmness, and just try to let the clients know that everything is going to be okay. I'll be looking after it, and give them a little bit of assurance is the most important thing.
All right, so I'll just go quickly into this last two questions. So just tell us, who's your ideal client? Who's your ideal client? Who are you looking to help?
Well, what I would love an ideal client would be someone that's got the 20% full-time job, earns a lot of money. That would be the ideal client. I had one yesterday that rang me up, and their loan value ratio, it's refinancing, loan value ratio is sitting at about 33%. He and his wife has got good income, that their surplus income after all the servicing's calculated. That's really ideal. And he said to me that I got him at hello, but I really got him at a good interest rate. But at the same time, Scott, the most complicated clients are my loyal customers. So that's not to say that that's not my ideal client either. I actually do love working with them. A lot of them, they don't negotiate on interest rate. They're time poor. They've been with me I've been in this industry for 18 years. They've been with me for 18 years. And every time they purchase, it would be, hey, Tu, I've done this. Do you think it works? And I do the rest for them, and that's it. There's a trust. I love the complex deals because they're challenging. And it creates that special bond between me and the customer, the trust, the friendship, and the nurturing of the relationship over the years. And I find that in my career very satisfying. And I actually really love this question, Scott, because that enables me to reflect and also evaluate what I've been doing. Like, you've got to quantify the characteristics, you've got to find the demographics, and you've got to understand these three things to be able to help the customers. So thank you for that. You're doing your job because you've done it for a long time, but doing a job well also means that you need to reflect on what you've been doing and also improve what you're doing. So that, I actually love the question.
Yeah, it's always trying to educate and also educate yourself as well as others, but also don't be complacent. That's a big problem when you've been in it for so long. And just the last question. So what ideas or rules would you go by to attain lifelong longevity?
Well, I think you already know that. You're doing very good at it. A well-balanced diet is definitely something that I have to improve, to be honest. And thanks for the inspiration. But I just need to eat more and eat more regularly. So the eating habit isn't there, but I think the most two important, along with that, I think being social is also very important. You've got to be with people that you love. You've got to laugh. You have to have meaning relationships, conversations, And I think also networking has allowed me to find some strong, influential women who supports and inspires me every day. And whether it's business or family, you need that community, I think. I said women there, but there are men too, but there is a special group of women that I have at the moment who we talk on a regular basis to support each other. So that to me is quite important. The other thing is being active, and for me, Scott, you love walking along the beach, right? That's your thing. I love hiking, and I've hiked with friends before. I've hiked with groups of people, but lately I just realized that I just love hiking by myself. I like the solace. I like the, I just like to be able to choose my own tracks. I want to do my own pace. I want to set my own goals. If I said I was going to do 19 Ks, I need to be by myself to be able to achieve those goals, rather than being with someone where you have to keep being social, have to keep up to their pace and doing things together. I just like my own pace. I like to be able to sit down whenever I want, but it is a place where I feel peace, where everything's just silence and all the weights lifted, and it's a place where I can empty everything that it's been clogging up for the whole week. And then you can fill it up with all the positive energy to start the week. And then I can all think about my goals. I can think about my purpose and make decisions. That's the thing with hiking for me. Like my niece asked me the other day, do you really like hiking? It can be quite boring for a lot of people, just hiking hours. But to me, it's just, it's my thing, and I actually do really love it.
Excellent answer. All right. So thank you so much, Tu. And you got a wrap, actually. Fiona Hines says that you still look like you're 20. So
yeah. Well, thank you, Scott. I really appreciate the opportunity to share my thoughts and my insights with you and the audience. Thank you for inviting me as your guest on the podcast.
Thank you, Tu, for your time. And you've been watching the Get Busy Livin podcast, and I'm Dr. Scott from Healthy Habits Club. Thank you, Tu, and much appreciated. And yeah, you still do look like you're 20. I have to agree with you. Yeah.
Thank you, Scott. Lovely chatting to you. Hope to see you very soon.
Thanks, guys. Have a great day.
Bye.